The Standard Deviations podcast is a weekly production that looks at money, mind, and meaning, all through a psychological lens. Each week, psychologist and New York Times bestselling author Dr. Daniel Crosby interviews a fascinating new guest, experts in everything from finance to literature to wellness.
When was the last time you splurged on something when you knew it probably conflicted with one of your financial goals, like paying down debt or saving for future fun in retirement? Well, if you do this, you're not alone. It's because of present bias, or to use the psychobabble term, hyperbolic discounting. As humans, we have a tendency to let the immediate rewards of the here and now win out over a desired future reality. To learn more, check out the Cash Dash Dash, a planning tool brought to you by the Guardian Network to see just how much your short-term spends might be impacting your longer-term financial goals. Play today by visiting www.livingconfidently.com/play. Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby, and I am joined today by Paul Hebert, who is the Vice President of Individual Performance Strategy at Creative Group. He's widely considered an expert on motivation and incentives and works to influence behaviors that drive business results through employees, channel partners, and consumers. He's partnered with brands like Michelin, Chrysler Service, and Toyota Financial Services, AT&T, Goodyear, and a variety of other Fortune 1000 companies. He's a longtime friend of mine, and I know he's going to have lots of great stuff to share with us today. Welcome to the show, Paul.
Well, thank you very much. And thanks for setting the bar so high.
Yeah, like nowhere to go
Lots
now,
of great
but
stuff,
to be disappointing, you know, nothing to do now, but
Right.
disappoint. So, Paul, the invitation to appear here emerged from a conversation that we were having about probability neglect and the human distaste for ambiguity. So if we start at the very beginning, like evolutionarily, why is it that humankind is built to ignore numbers and hate uncertainty?
You know, at least from my own background research and everything I've put together, especially from an evolutionary standpoint, uncertainty creates the ability in us to question things, right? So if I'm uncertain, I have to start asking questions to get to certainty. And part of that is, I think, all around this idea of trying to keep me alive. So if I'm not sure what's behind that next bend or that rock or whatever, it's going to put my, so to speak, my spidey senses up, right? And it's going to put me on edge, kind of kick in that whole fight or flight type thing, because that uncertainty is a stress driver. And it's all about keeping me alive. If I was certain there's nothing around the corner, I'm just la-di-da. But if there is, then that saber-toothed tiger has a nice meal and I'm gone. So I think, just evolutionarily, being uncertain just drives that stress level up. So we always try to remove that. I would also say, though, that over time, I know evolutionarily speaking, we haven't been on the timeline that long. But on the other hand, I think we've evolved to the point where we start thinking we control things. And so we feel like we're out of control whenever there is something uncertain. So both of those things, I think, work together to just kind of make it a very uncomfortable thing. And so we are always just trying to make everything certain and controlled.
Yeah,
Make sense?
It does. In Personal Benchmark, one of my first behavioral finance books, I wrote about sort of three primary drivers of human behavior, were the seeking for simplicity, safety, and surety. Everyone that knows my work knows that I love alliteration. So simple, safe, and sure are sort of the things that we're after. But the world isn't built like that. And I love the point that you made, which is basically like we think we control things, so things start to feel out of control. I think if we were honest, if we really had a 30,000 foot view of what we are going through at any given time, things are much more out of our control than we likely realize. But we like to think of things as simple, safe, and sure. So, I live here in Atlanta. I can't name names, but there is a large bank, which I'm sure everyone can do the math on, that's going through a merger right now. And along with that merger, I have, of course, a lot of friends who work there. And as I've followed them and I've talked to them and caught up with them and asked about this merger, I've heard about how much uncertainty was a part of this. And so all of your work, Paul, is around motivation in the workplace. When there's uncertainty in the workplace, what sort of behaviors start to manifest themselves?
Well, first thing that happens is people start to exhibit the worst in themselves, right? Because uncertainty drives stress. Stress drives behaviors we don't like about ourselves. And, we get very inwardly focused, self-centered. We stop, being empathetic to other people. We're worried about making sure we get ours. All of that starts playing in. So as a whole, the employee base gets much less collaborative. They start, worrying about every little thing that's happening, because if I'm unsure about the big stuff, how much of the little stuff am I also unsure of? And then every comment has that edge of unsurety to it. So it permeates. And the thing is that even if you knew, the fact that there is change coming is, that's a red flag that I'm unsure and uncertain. So even if they came out and said, here's what's going to happen, because it's a big change, especially a merger, right? Those are huge and they're writ large in history that every merger is a problem for half the people. So what percentage, what side of that line am I on? Because I know that half of these people aren't going to be happy when this is over, or a goodly number. So I think this whole idea internally at companies, even when we try to control for it, it just gets very, very selfish. And you have to you got to keep your wits about you while everybody else is losing theirs, so to speak. Because you end up making a lot of mistakes when you're unsure. You start, chasing rabbits that you shouldn't chase, things like that. So as an individual, pull yourself out of the mix and try to just remain above the fray.
So we've established, I think, pretty emphatically that uncertainty is not our friend, right? It leads us to lack empathy. It leads us to stress. It leads work to grind to a halt. In many cases, it leads people to become self-centered. And yet, when I think about the world that we have to navigate, I have young children. There's so much uncertainty with them and their health and their future. If you want to have a relationship, right? Relationships are fraught with uncertainty and fraught with risk. If you want to play in capital markets, which we all have to do, if we want to keep up with inflation, all of these things have a strong element of uncertainty. So we can't just isolate ourselves from uncertainty. Are there any tips or tricks you have for dealing with uncertainty, given that as much as we hate it, it's part and parcel of some of the best things in life?
Yeah, I mean, I think when I look at it, especially with clients, when I try to talk it through with them, the fact that it is there, I mean, knowing that and accepting that, it's kind of the first stage, is that just recognize that there are some things that are just way outside of your control. Somebody said to me years ago, I don't know if it was my father or somebody like that, somebody that was a mentor to me, at some point said, Paul, just remember your sphere of control and your sphere of influence. And don't try to extend outside of that. And if you do, that's when it gets really hairy. But if I can stay within those two spheres, I can be calm a little bit, because if I know what I can control, which is what time does my alarm go off in the morning, what time do I get into the shower, what time do I get in front of my office, at my office, those things I can control to a degree, to a great degree. Knowing what I can influence is important too. So just keeping in mind that you are a smaller piece in this bigger machine helps you know where to draw those lines. So the first thing is just accept the fact that there's things that are uncontrollable. And know that, because I think when we lose control, many, many times we start to believe it's because of something we did incorrectly or that we did wrong. We start to blame ourselves for the situation we're in when we may or may not have had any control over it. So knowing that we have all of this uncontrollable stuff out there and accepting that as just part of life, like you mentioned, that kind of takes that blame and guilt out of the equation too. So my strategy has always been is to look for my sphere of control, look for my sphere of influence, and try to kind of stay within those boundaries. And anything outside of that, it's just smile, and do what you can do.
But you make another great point there. It's a scary thing for all the reasons we've already covered, to own how much of life and how much of your own success is out of your power. But ultimately, it's a forgiving thing to do. It's a gentle thing to do with yourself, because otherwise, anything that doesn't go your way, you blame yourself for, and it you have to understand what you can control and what you can't to know what to worry about. I wrote in the Laws of Wealth that great investors control the controllable. It's a very similar point. But many people, when they come to me, they find out that I work in finance. They go, well, what's going to happen with interest rates, or what's the Fed going to do, or what's the president going to tweet, or, all these things are unknowable and out of our control. You have to say, look, I have no idea, but here's what I do know. People that diversify, people that stay the course, people that manage their fees, people who select a quality advisor. Like, these are all things you can control. So discern what's controllable, discern what's not, and work very hard on the things that are within your power.
And I'm, it's funny because this whole conversation, the reason we're even chatting today started from the fact that I think I had just come out of a meeting where a client was asking me, basically, can you guarantee that's going to happen? We were designing a program, and I was using some, behavioral psychology stuff and some, behavioral economics theories that says, okay, if we design it in this way, it'll improve the program. And they're like, well, can you guarantee that that's going to happen? And I kept thinking about, well, why is he worried about the guarantee? This is more about odds, is that really all I'm trying to do is increase the odds that somebody will change their behavior. I cannot guarantee that 100% of these people will. I mean, if you want to look at the most infinitely variable thing in this world, look at a human being. From minute to minute, hour to hour, day to day, we are different people. And to try to come up with anything that's 100% is insane. But here was somebody, a VP, that was used to feeling in control and now wanted a guarantee that we could control behavior. So it's just knowing that you can't is a great place to start.
A great book that speaks to this is Thinking in Bets by Annie Duke. She's a professional poker player turned sort of strategy consultant. And, she writes very eloquently about thinking in bets, thinking in probabilities. And in my last two books, I've said basically in a nutshell, behavioral investing is tilting probability in your favor at every turn. Now, even in financial markets, in many instances, that's like a 60-40 thing. You're going to win 60% of the time. But if you size your bets appropriately and you diversify appropriately, a 40% losing percentage can still lead to some pretty incredible results over time. And so nothing's guaranteed when human behavior is the conversation, but tilting probability in your favor is still a powerful, powerful thing. So we mentioned. Go ahead.
I was going to say, I'm glad you brought that book up, because that's been kind of my Bible recently about how I'm making decisions at work. Because I was introduced to her obviously when she was playing poker, and when Texas Hold'em was hot about 5 or 8 years ago, where everybody was watching it on ESPN. And I saw her then. And then when she got on to the Behavioral Grooves team and did a podcast with them is when I read her book. And I've been using that as my decision criteria ever since. Is, all right, what does my probability say about this decision, yes or no? And it sped up decisions, as well as, I've made a few mistakes, but I've made, I think, more that were correct. So I think that's a great way to look at things.
So Annie's book, friend of the pod, Annie's book is one to read. Another book that is a must read for anyone who's interested in the things we're talking about today is Influence, the Psychology of Persuasion by Robert Cialdini. Now, you cited this book in a post that I read from you recently, where you talked about social proof being the most underutilized of all influence mechanisms. And you specifically cited this towel study that was done by Cialdini in his book, Influence. So can you tell us about the towel study, first of all, set it up for us, and then tell us why you think social proof is so underutilized?
I'd love to, because it's one of my favorites. Everybody has their favorite behavioral thing, right, that you lean into all the time, and that's one of mine, social proof. But the towel study, this will be an interesting story, hopefully, for people that are interested in this stuff, because when it first came out, it was pretty widely well received, and then it's been repeated a couple times with not the same output. So it's kind of interesting that even things that we think have validity over time can change too. And although there's always a lot of explanations here, but the basic premise of the towel study is this idea that at hotels, they want you to reuse your towels because it reduces workload on them. It reduces water usage. There's a cost value to them. From an environmental standpoint, it's better if we don't have to rewash everything every day just because you used it once. And I mean, there's probably a million people out there that don't rewash their towels at home. They hang them up and they use them the next day. So the idea is how do they influence people to reuse their towels at the hotels? And, you've probably seen the little cards sitting on the desk that say, protect the environment. If you want to reuse your towel, hang it back up and blah, blah, blah. Well, they looked at that and they said, what can we make that can we do that better? And they basically set up an experiment where they had 5 different dependent variables, basically saying that we're going to use the environmental one. That was kind of their starting point, the control for them, so to speak, which just says, basically protect the environment, reuse your towels. Then they did another one where they said, that was country or, citizen, kind of like people like from Germany or people from the US reuse their towel, that kind of thing. They did one with male, female. They did another one where they did just guests in this hotel. But the idea was they said, guests in this hotel, 75% of the guests in this hotel reuse their towels. We'd help, to protect the environment and blah, blah, blah. And they left that out as on the card versus just the other one. And they also did one where they said people in this room reuse their towels 75%. So they even narrowed it down further to say the people like you who have stayed in this exact room have reused their towels 75% of the time. And the numbers are pretty astounding. If you looked at the standard environmental pledge, they get about a 37% reuse rate. But when they went to the, guests in this hotel reused at 75%, that jumped up to 44%. And when they actually specified the guests in this room reused, it went up to almost 50%. So that's a huge change. I mean, in some cases, 10, 20% change just by changing the words from people in this hotel to people in this room. And it gets back to this idea that as human beings, we look to other people to see what is acceptable behavior. That's kept people, it's kind of this idea, this herding mentality that if I do what other people are doing, I'm likely to survive because they're surviving. And it's kind of that same idea. But I think sometimes we think it's a cheesy way to influence behavior. And I think that's why it's underutilized, is that it just sounds too easy. It's the 4 out of 5 dentists surveyed kind of thing. Even though that one also throws in the whole authority principle as well. But, in my programs, when I'm designing programs for my client, to be able to say that 50% of the people in this program achieve their goal changes it from, wow, I'm not achieving my goal and that's okay, to I'm kind of below the average. I need to move that line. I need to sell some more. I need to make a few more calls. And we just don't leverage that whole social proof thing very much. And I think it's because we think it's easy. It's just kind of, I don't know if it's like, just kind of too easy. I mean, they don't think of it too much. I use it a lot in talking to clients because I like to start off all my sales calls with, other sales VPs like you have thought these types of programs increased their bottom line. Well, now all of a sudden they're going to, okay, well, I got to be like those guys. So social proof, I think, is one of those things that has kept human beings alive for, 400,000 years, and probably will keep us alive for a little bit longer.
So it's a couple of points I want to make here. So first is my realtor used social proof on me to great effect when we were purchasing our house. We were driving her crazy, making her show us houses all over Atlanta. We were being indecisive. And so finally she takes us to our now neighborhood. And, she's driving us around and says, guys, this is the neighborhood for well-educated young professionals who care about giving their kids the very best educational outcomes. And so like that is a brilliant piece of social proof, because she's effectively put us in a box, that we want to be in, that you're, successful, well-educated young professionals. And she says, look, they made this choice. It worked for them. It's likely to work for you too. Because all of us every day, we're reeling from this sort of choice overload. We're reeling from decisional fatigue. And so we say, if it works for other people, then heck, it might work for me. And sure enough, here we are podcasting from that very house. I think thanks in large part to her couching it that way. And it's a simple but enormously powerful tool, I think.
Well, it cracks me up because I read that book, Influence. It's my Bible. I've got it sitting on the desk here. And I mean, I've got more pages dog-eared and stickered and everything in that book than anything. And I'm surprised at how many people in the marketing world haven't read it yet. So I recommend it every time I talk to anybody. But I always think about the old IBM adage, right? Is nobody ever got fired for buying IBM? Talk about the perfect social proof thing. Is they're basically saying, if you want to keep your job, like everybody else is buying IBM, why would you not? Just stick with that. So, again, I think it's underutilized. I think and it's easy to use. It's not a hard thing to find the statistic that'll back up. Yeah, the majority of the people that are successful do X. Look at all the books that are written today, right? They're, it's like, what do successful people do more often than other people? Well, I want to be successful too. So and I'm like them. So yeah. I love it.
Yeah. So I want to make one more point before we move on from social proof. I was recently in Paris. I was in Paris last week. And so for me, the highlight of the trips was going through the Parisian catacombs. So there's millions of Parisians buried there. They started moving them there when there was flooding and graves were flooding and, bones and bodies were rising up. And so they had to move them to sort of a central underground location just to stop the spread of disease and the smell and everything. Yeah. So effectively now from there's 3 million Parisians buried in this underground subterranean level, and they make designs out of the bones, these very elaborate designs, and they have signs that say things like, effectively like live your life because nothing is promised. It's very powerful. But there was a sign there that said, don't steal the bones, because apparently there's people in this world that will, grab a piece of a leg bone and take it home as a souvenir. Obviously, they don't believe in ghosts the way that I do, because I would never, ever. That's a sure way to get haunted. But what's interesting, it said, please don't steal the bones. And it's, every year, hundreds of people steal these bones, and, it's eroding the quality of this and the beauty and the sanctity of it. And actually, that's a misapplication of social proof, because when you say hundreds of people steal these bones every year, you're effectively giving permission. Right. So if it's something that you want to do, highlight the ways in which people like you have done that same thing. But if you're trying to diminish the frequency of a behavior, don't highlight how everyone's doing it. We do this all the time. You see news reports, everyone in America's fat, everyone's stealing, everyone's smoking, whatever it is. It weirdly, implicitly gives us permission to do the thing we don't want to do. So be careful about how you apply social proof.
Yeah, actually, your example with the catacombs is also very similar to Cialdini, where he did the petrified forest experiment too, where they had, telling people not to take the petrified wood. And as soon as they put the sign up saying, don't take the wood, people are like, oh, people take the wood? I didn't know that. Let me go grab some. And they had the same problem, because basically you said that's a problem, so other people must be doing it, therefore it's okay. That's another thing with this whole idea, why they don't like to talk about in the press suicides either. They don't like to publish and discuss that when there is a suicide, because they don't want to show that that's a regular thing in some instances. And again, it gets back to this idea that you can have social proof that backfires just as well. You're right.
Yeah, Cialdini famously talks about the spread of suicides whenever there is a high profile suicide, and you can assume the same of shootings and other tragedies, right? That as these things become widespread, then copycats occur. It's a tricky thing to need a free press, but also to realize that talking about these things it brings them about in a very real sense.
Well, as a parent, you know this as well as I do too, right? When you read the paper, you don't want your kids to go 10 feet away from you anymore, even though the actual statistics would say they're safer today than they've ever been. When I was a kid, we'd ride our bikes 4 or 5 miles from our house during the day. As long as we were home by the time the streetlights came on, it was cool. Nowadays, if they're not scheduled and overseen 24/7, you're just opening yourself up for some sort of horror. And the reality isn't that. It's just the press has and social media has just made this ridiculous, right? It's on steroids now. But yeah, social proof. That's why I say it's using it well, I think, is underused. Using it poorly is probably overused.
Perfect. So in this same vein, we're going to stick with authors who have written great works about motivation and bringing about the sort of desired behaviors. Mm-hmm. I want to talk about Chip and Dan Heath's book, which talks about some hallmarks of advice that sticks. So just to set the table a little bit, in my industry, about 40% of Americans now get some sort of financial advice, but consistent with the statistics around medical noncompliance, only about half of them take that advice. So if you think about, who's getting advice and actually listening to that advice, it's only about 20% or fewer of Americans. So Chip and Dan Heath in their book have these handful of things that help advice to stick. And I wanted to just get your quick take on a couple of those. The first thing that they say that needs to happen for advice to be sticky is that it needs to be simple. And yet you've already talked today in this episode about our human desire to want to overcomplicate things. So if simplicity is so powerful, why do we have this natural desire to complicate things? And how can we get this right?
Well, I think, first of all, we always have to look at these things through the lens of what is the objective? What is our goal? And it's funny because this whole simplicity, complexity fight, if you will, is something I deal with my clients on a regular basis, because I have this problem where if I make something sound simple to do, my value goes down. Why would I pay a lot for something simple? Number one. If I make it sound really complex, I make it like they can't buy it. So it's that, yes, the goal of Made to Stick, if you think through that whole book, was about how to get an idea to stick with somebody, how to get a concept to stay with somebody over time. It had nothing to do with the value of the idea or how much you can charge for the idea. So the goal with Made to Stick was about how to make an idea stay with somebody. On the other hand, if I want to drive value for an idea up, I can't make it too simple. So in our world, at least in my world, the Made to Stick part, the simplicity part, is all about, do I stick with that client contact after I've left the room? Have I left them with something that makes it easy to remember me and my idea, versus changing the value prop that we started with? So I use Made to Stick all the time. At the end of any conversation I have with a client, I always try to come up with some sentence that sums up the whole thing. And you mentioned alliteration earlier. If I can do that with alliteration, that's great. If I could do it with some sort of common analogy or something like that, that's even better. All of those things, kind of go into this idea. Is I want to leave them with this idea. So simplicity versus complexity, they're just different things. They're designed to do different things, I guess is my point. Don't try to make them do the same thing.
What if we want to give advice that sticks, but also get paid well for that advice?
Well,
because I agree. You look at Jack Bogle, who pioneered the index fund, which has been, of course, enormously successful. I mean, he was laughed out of the room early on because the idea of an index fund was just seen as too simple. Well, he won the day eventually, but not before he got laughed at for a very long time. How do we give advice that sticks if people have this natural aversion to paying for things that are too easy?
Again, it gets back to what's the goal. In my world, I want to start with what is your problem? And then I go through all the work that goes into solving that problem. But then I summarize that with the made to stick summary. So that again, they've now seen, man, there's a lot to this. But if I needed to tell somebody, I could tell them about it in 10 words or 20 words. So now I'm stuck in their mind, but I didn't change the fact that there's still complexity behind it. So again, it's back to what are you wanting this part of this conversation to do? And don't try to make simplicity be how you drive value. Simplicity is about remembering. It's about keeping in the forefront of your mind. It's about just understanding the overall concept versus it's a difference between sausage and knowing how sausage is being made.
Perfect. So the second tip is that advice that sticks is unexpected. And so I was for a time on a speaking tour with a gentleman who was part of the Ritz-Carlton's sort of leadership development arm. And he used to joke that no one calls home to say, you have to stay at the Ritz because their beds have clean sheets, right? Because that's just totally expected. And so the Ritz's motto became surprise and delight. Basically, you want to do things that are unexpected, but of course, unexpected to the upside. Right. So how can we give service and advice that feels surprising?
Usually, I look at that from the point of view of stories, finding a way to tell it in a way that's surprising as opposed to the actual thing. I mean, if you think about nobody calls home because the sheets are clean, but you would say, I did come in and I needed the sheets changed and they were changed within 22 minutes or 12 minutes or 16 minutes. All of a sudden now that's unexpected because it was happened so quickly, but it's still about clean sheets. So again, I look for stories. I look for those, edge cases on anything I'm dealing with, because there's always one. There's always some edge case out there that I can pull in and use that as an example of what we bring to the table. It's never, it's never that the average, what we do every day on average isn't unexpected or special. But there are all those little tiny edge cases that we can pull in now and then. And those are the stories we need to tell about our services and about our products that end up getting, people to go, I never thought of that before. Or I always like to take the opposite, is just spin everything up and turn it around and work backwards. So if I'm talking about motivation, I'll tell a story about demotivation. On how do you demotivate somebody? That's unexpected. Now all of a sudden they start going on. They know what they're talking about now. So I've added this element that they hadn't considered before into the equation. So it's always, I think it's looking at edge cases, telling stories about things like that. Does that make sense?
It does. So the gentleman from the Ritz had a great edge case story, like you mentioned. It was about a child who left his stuffed animal at a Ritz-Carlton property. The parents get home and they realize, the kid realizes that he left his stuffy at the Ritz. And of course, anyone with small children knows that if your kids lose their stuffy, they're inconsolable. And so the parents write to the Ritz and say, hey, if you find this teddy bear, can you please send it back to us? And so the expectation is that if you find it, they'll mail it back to you, right? Like that's sort of what you're expecting. But what the employees at the Ritz did that was unexpected to the upside was that they took the little teddy bear around, they took him to the spa and they put cucumbers on his eyes. They took him to the kitchen and they had him cooking soup, and they took him to the pool. And they took all these pictures and they created a photo book of Teddy Bear's journey, and they mail back the photo book with the pictures and the teddy bear. And they say, hey, look, kiddo, sorry you missed your bear. He was off having a good time at the Ritz. Like, hope to see you again soon. The person in question was a travel blogger who then shares this story on their travel blog. And it, results in untold millions of free advertising for the Ritz, on the cost of, a little bit of time and a couple of pictures. And so that to me is like a great example of just going above and beyond to do something that's unexpected and above and beyond the call of duty.
Yeah, and again, like that was it wasn't easy, but it wasn't hard either. But it did take a little bit extra effort. It took a little imagination. I'd be kind of, the cynic in me, unfortunately, says, I wonder, did they know this was a travel blogger, and because of that, did they go above and beyond versus just mailing it back with a thank you note? But that's the cynic in me.
Who hurt you, Paul? Who hurt you?
I know, right? Everybody did. But anyway, I love that story. That is a great story. And again, those are the things that with a little bit of extra effort, we can all do. And again, to this point of coming up with ideas that are unexpected, you can plan this stuff ahead of time, knowing that this is how you're going to talk in the future. Think about what you're doing today, and can you create an unexpected event? One of the things I try to do in all of the programs I design for my clients, is we have surprise and delight parts of our program, where traditionally in incentive and reward programs, it's pretty standardized. Sell X and get Y, and every month we get a report and we do they get points and blah, blah, blah. Well, what we try to do is just every once in a while, we'll send, here's 20 points. You logged in today. Thanks a lot. And we don't mention that anywhere in the program. It's just all of a sudden they get them and they're like, wow, that was different. But we've kind of just decided ahead of time we're going to be unexpected. And I think you can do that in almost any business, is figure out where those unexpected places happen.
Yeah, it's interesting. The reason, there's a lot of research, we've talked on the show before about the fact that experiences tend to buy more happiness than things. Mm-hmm. And the reason that experiences tend to buy more happiness is because they're unexpected. If you travel to a new place, definitionally, it's sort of weird or unique or new or varied relative to your everyday. Whereas if you buy a Lamborghini, as gorgeous a car as that Lamborghini may be, you soon become inured to it because it sits in your driveway every day and you see it every day, and it's your Lamborghini. So even the nicest house, the nicest car, the biggest house, the best car, these sorts of things become expected. And there's really something in the human psyche that craves things that are unexpected and holds on to those memories. So, Paul, we're gonna roll with your cynicism for a bit, because we got two cynical guys on the line here. And so one of the things that Chip and Dan Heath talk about in giving advice that sticks is making things emotional. Mm-hmm. Now, with respect to behavioral finance, I've seen some advisory firms try and do this. By sort of digging into clients' personal lives, asking pointed questions about values and frames and family life. And some people really like it, and other people are cynical and sort of say, what is this voodoo? Just manage my money. Mm-hmm. So how can we induce emotion? Because we know emotion makes things stick. But how can we induce emotion without setting off sort of cynical triggers like we're talking about?
Yeah, I think from my perspective, the cynicism jumps out when you feel like you're being manipulated, when it's kind of like when it's telegraphed a mile away. I mean, I'm sorry, but every time McDonald's commercials come on, I know they're going to try to make me cry, right? It's there. It's part of their package. I think from my perspective, what I try to do to inject emotion into my process is to start asking questions of the person, get them to start creating that emotional story on their own versus me trying to push one into their brain. So it's kind of this, all right, if I'm asking you to invest, is why are you investing? What is the outcome? And don't just say it's more money, right? Everybody wants more money. What is your goal? So you get them to start telling the story about, well, what would that mean to you? What does that look like? We try to get people to set goals in programs and set goals as part of the process, because points and dollars, and people don't get out of bed for that, but they do get out of bed because Bobby needs a bicycle or Mary needs a chemistry set because that's her birthday coming up. So you try to get people to tell their own story versus trying to push one on them. So I guess it's this idea that don't expect to force the emotion. Don't push. I guess the way I would say, don't push the emotion, pull it.
Yeah.
Does that make sense?
No, that's very good. Like you said it perfectly. Don't push it, pull it. I think anytime you've seen a movie or a commercial where it's sort of orchestrated to be saccharine or it's orchestrated to be to induce an emotion, I think we have a real natural cynical response to that. We have a real natural pushback. You saw the Peloton commercial that was, was going around this last week that resulted in like a 900 something $1 million loss in the value of the stock in just the day or two following it. And it was sort of contrived emotionality, I would say. So we need to be eliciting this from our clients as part of a natural give and take and not trying to cue the strings in a cheesy way that's going to make them cry, I think.
Yeah, and that whole Peloton thing, I had to laugh a little bit because they missed one little tiny element that if they had just done this, I don't think they would have had any of that problem. Is there was no, and I think it was who was the director of the Birds? I'm losing
Hitchcock.
Hitchcock used to call it the MacGuffin, right? What moves the story along? There was no MacGuffin. Why did she want the Peloton? Was there an issue with her health? What was the reason for, we missed that. And because of that, we substituted our reason and it became a negative. If they had started off with a conversation saying, honey, I need to get in shape, or there's a marathon coming up and I really would like to play in that, but I'm just not in shape. And all of a sudden that happened. And then they showed her closing out the marathon. All of a sudden that ad's perfect.
Well, when I watched the reaction unfold in real time on social media, there was an obvious roasting of the very thing you're talking about, which was, wait a minute, why does this thin, beautiful woman, what is her reason for wanting a Peloton? Now, of course, there are reasons to exercise besides appearances and weight, and I mean, there's untold health benefits and the rest, but that was never made clear. Right. In the episode. And so the attempt at drawing out emotionality really strongly backfired in a powerful way.
Well, because we ended up substituting, and that we do that every time. When we started talking about uncertainty, right? The problem with uncertainty is we put things into that hole to make it certain. Yeah. And they're never good. we don't put good stuff in there. It's always negative stuff.
It's not a generous substitution, typically.
No, not at all.
So, Paul, we got one last final question before you tell us where people can learn more about your work. But this is a bit of a personal question, and it's I think pertains to people like you and I who work in behavioral science. Because for me, it's interesting to introspect about the ways that we do and don't take our own medicine. So I have made probably all of the bad financial decisions that I have written books counseling people not to make. Right. And I mean, after I wrote the books, not, I've written numerous books on what to do with your money. And then I still consistently failed to live up to my own standards and my own advice. I know what I need to do for my health and I still eat too much sugar. So you are a cancer survivor and you've also spent your life talking about ways to elicit motivation, to elicit the very best in humankind. So when you were in the midst of that fight with cancer, were you able to apply the lessons, the behavioral lessons you spent your life learning, or did these things kind of fly out the window at the time when you really needed them most?
That's an interesting question because it's everybody has a different reaction, to things in the world, right? Everybody's different. That's the one variable that is always a variable, and that's the human condition. Everybody reacts differently to those kinds of situations. So when I write for a couple of different websites, one of which is cancer related, and we always try to make sure we don't tell anybody else's story. You can only tell your own. But I don't know if anything changed once you hear you have cancer. You spend a lot of time wishing you hadn't done a lot of things in the past. But there's also a percentage of your brain that just says, I would have gotten this regardless, right? Even though the odds were much higher because of my lifestyle. I enjoyed myself quite a bit from college on. I smoked and did a lot of things I shouldn't have done. And so there is a part of me that has to take that blame. but you really end up just at that point compartmentalizing, and I hate to say it, but you give up on this idea of control at that point. So this issue of uncertainty it's 100% uncertain, but it's also 100% out of your control. So you don't have the anxiety anymore. I didn't anyway. I just compartmentalized it away and said, it is what it is. I have no control over it going forward. My doctors might, the researchers might, and so you just kind of roll with it. I hate to say that. It didn't, it did change some things I do, but it didn't change a ton. One of the weird things about wellness and health and all of that is, habits are things that you build up over time. So the older you get, the more ingrained those habits are. So even if something as horrible as cancer hits you, there are still people who have got, with lung cancer that continue to smoke. You would think that would never happen, right? But it does. 50 years of reinforcing a habit every day is really hard to break overnight. So I would say that I've changed a few of my behaviors, not a ton of them, not as many as I should. I should exercise more. I should eat less, all of that. But in general, it's just the human condition, and there are days I do better than others. But I'm glad I'm here, and I just kind of one day at a time. It I guess is my best answer. I don't know if that answered the question or where you wanted to take that at all, but I don't know if when you're confronted with that morality play or mortality play, actually. Everything changes. It's just a different world. Decisions you make when you have to start putting together your will, for sure. And, there's a percent, you now have an actual percentage that within 5 years you're going to be dead. Those things change stuff. But, once you get, you come back pretty strong from that.
Well, thank you, first of all, for sharing your experience. And I'm certainly glad you're around as well. And certainly glad that you are out the other side of that fight for now. But, it's interesting. I've like I think many people have experienced strong bouts of anxiety and depression throughout my life. I mean, I joke, sort of not jokingly, that nobody goes into psychology. No one gets a PhD in psychology because they're well adjusted. I think people have said at times when I've been in a dark place, they've said, well, how great, sort of physician heal thyself, like how great that you have the skills to sort of talk yourself out of it. And I ask the question because I've personally never had any luck doing that. And, I think it speaks to the power of relationships. And, we see time and time again that even people who know, bringing it back to the world of finance, even people who know the right thing to do have trouble doing it unless they receive that advice from an external source. So I'm a huge advocate for therapy. I'm a huge advocate for financial advice, and just, doing things in, we'll call it peacetime, to strengthen relationships, to strengthen the ties around you, so that when you need them, they're there for you. Because even, I would say, for experts, I think it's hard to get outside of yourself long enough to do the right thing sometimes. But when I hear you say that, I totally get that, and that's one of the things I think, at least I was never taught growing up, to get outside myself, right? If you're a man, you take care of it, you do it. My dad was raised that way, blah, blah, blah. And so there's always that reticence to go out and get help. And the other thing too is that, without having a second opinion, we know how dumb we are, right? We're inside our heads. So we know the stupidity that is us. So every decision we make, we know we have to bounce that against our own stupidity, and we know it. We don't know other people's. We always think other people have their stuff together more than we do. So getting that point of view helps reinforce and says, oh, okay, I am okay. That's social proof, right? I'm like them. They're like me. Good. Now we've got kind of a good jumping off point. So I'm a big fan. Yeah, talk to people. The reason I write for these cancer sites is because it helps other people, get through their day. I started my blog on my cancer journey the day I found out basically that I had it.
If you want to go out to pstrong.com, I can't believe nobody, Livestrong didn't grab that one, but, pstrong.com, that's where my blog is about my cancer journey. So it helps people to talk about these things. It absolutely does. Get outside your head for sure.
Yes. Well, Paul, thank you for all of your insights today. If people want to follow your journey, if they want to read about your cancer experiences, if they want to read about your professional insights, where can people find you?
Okay, the easiest way, for the cancer stuff, there's my own personal blog for that is called pstrong.com, P-E-E strong.com. Pretty easy. For work, if you want to talk to me about that, I work for a company called Creative Group, Inc. We're headquartered out of Chicago, and we do programs that nudge and change behavior. I think you can just, if you want to get a hold of me, it's P. Hebert, Paul, P as in Paul Hebert, at creativegroupinc.com. I'm on the Twitters at IncentIntel, INCENTINTEL. And that came from my original blog, which was Incentive Intelligence. And I got on Twitter so early, I thought I had to just cram all the letters together. So it's now IncentIntel. But now I wish I could go back and change it, but it's a little late in the game. So those are the best places to get a hold of me there, probably. I mean, if you Google Paul Hebert incentives, I'll be at least in the top 4.
Perfect. Paul, thank you again for sharing your journey and for sharing your insights with us. Thanks again.
You bet. Thanks so much.
All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by the Guardian Life Insurance Company of America, Guardian, and its affiliates, subsidiaries, employees, and agents, including Park Avenue Securities and the Guardian Network. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information participants consider reliable, and Dr. Crosby and Guardian are not responsible for the consequences of any decisions or actions taken because of the information provided. Guardian copyright is a registered trademark of the Guardian Life Insurance Company of America. All materials are subject to United States copyright laws. Copyright 2020 Guardian. 2020-93897. Expiration 02-2022.